What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and break down why on earth I'm incredibly bullish for Tesla, and actually talk about this from a different perspective because we did see some very nice moves from the options chain, and I'm going to actually explain to you why on earth the options chain could play a very big role in Tesla running up for the next few weeks. Now, that may sound crazy, but once you watch this video, it should make a lot of sense. Now, before I break this down though, before I say anything about this, I have to mention a couple of things real quick. The first thing is I'm not a financial planner, so please don't take this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $2,000. And you could always sell these 6 free stocks for cash and use that cash to buy some Tesla shares for free in this limited time offer that ends in just 2 weeks. So please check that out. With that out of the way, let's get on with the video. So looking at Tesla, okay, when you look at the share price, all right, there have been days where this thing makes very bullish moves, other days where it's been dropping. Last couple of weeks, we've been dropping pretty darn hard, right? Now we're starting to show some really good life by this nice push up that we got, okay? And there's a reason why this is amazing. We pushed up really hard over the last couple of days, the last couple of trading days. We went from like 620 all the way up to that 759 range. We did really well. Now, what's so good about this is when you look at the options chain, okay, we have a lot of calls that ended up in the money. I want to explain why this is important. So when you buy calls, it means that you are essentially buying something that will become more valuable if the share price of a company goes up. So when people buy calls, a call is just a derivative contract essentially. We're just talking about options. If you don't understand basic options, there are plenty of videos out there to learn more about them in a very facile way. Not necessarily some kind of. I'm not going to make this too complicated. Not going to go into too much details about how they work. But what happens is people buy. They were holding a bunch of Tesla calls. They bought them, and they were betting Tesla would go up. So what essentially ended up happening was when you buy these calls, there's someone that's involved in this. Okay, when you buy calls, there's a seller. Someone is selling these calls, and that's typically the market maker, which is like banks, big brokerages, people like that. They essentially are the ones that are selling you these calls on the other end, and you're buying them. And sometimes it could be other people, but typically, almost always, it's the market makers. So they're supposed to be these market specialists, but what happens is you have these big companies that are making transactions. They almost act like players in the game, and they have to hedge their risk position. They have to hedge. Okay. And there are many different processes known as delta hedging, things like that. What this means is when a lot of these calls end up in the money, the risk factor for these market makers goes up. It becomes riskier for them because they're selling all these calls, the share price is going up, you know. So they hedge their position, and all that means is you account for the risk by buying more shares. That's one of the ways they often do it if they haven't hedged for these higher prices, which they most likely haven't since we ran up so fast. So to make this in English, Tesla's share price goes up really hard. And big businesses, these market makers, they didn't prepare for it as fast as some people may think. So they have to, it's risky for them if you have a short position because the market was so short not too long ago. Everyone was going short. It's dropping, and dropping. That's why stocks like Tesla, when they drop hard, when the time comes for them to like start running, they could run really hard. Due to gamma, also shorts starting to cover, other factors could cause it to run up. So what's happening is they're going to be in a position where they start to delta hedge by buying back a bunch of Tesla shares. They could also buy other securities as well to make that happen. And as the market starts to push, it gives even more momentum for Tesla. So all these things coming together are what could cause a potential market-wide gamma squeeze. Now, it's not going to be a squeeze that takes us to all-time highs, in my opinion, but it could be a miniature one. Okay? A gamma squeeze, it's similar to a short squeeze. However, unlike a short squeeze, a gamma squeeze is caused by the market maker, not the trader. These are the people selling you all of these calls, all these options, whichever ones you're buying. So what's happening is it's caused by erratic price movements and large trading volumes that cause the market makers to exit their trades. This can lead to a spike in the price due to large volume traded by the gamma squeeze. Okay? So to repeat this, calls can be in the money or out the money based off their strike price. What this means is people had calls and maybe they started buying a lot of calls that ended up in the money. There was still a lot out of the money, but 78,000 is a good amount to end up in the money. So as the market is collectively pushing up, tons of calls end up in the money, which just means that the strike price of these calls is lower than the actual price of Tesla. Tesla went really high, really, really high. Lots of calls ended up in very, very good positions. So the shorts, not necessarily shorts, but more like market makers, some of them could actually be shorting these companies. They have to address these risks. They have to exit their trades. And they do it, like I said before, by hedging. So hedging is kind of like, imagine if you're an institution that's going to buy Tesla during a tricky time. Institutions could go both long and short at the same time. That's how they risk. That's how they address the risks. That's kind of like hedging. So if Tesla goes up, they make money. If it goes down, they could still make money. So now all these calls are in the money. How are you going to address these risks? How are you going to hedge this position? The answer is they have to start buying more Tesla shares. And maybe other institutions are like, oh yeah, Tesla's trying to go up. Let's buy some calls. Kathy Wood just bought $28 million worth of Tesla. Let that sink in. She saw this coming. She knew this thing had that potential temporary relief, gamma squeeze potential. Now, this isn't huge. This number isn't massive, so it's not going to push us up to like 1,000, but it could actually push us up slowly to that $800 to $900 range, in my opinion, over the next like week or two. Super, super bullish catalyst. Is it guaranteed? No, but it's very probable, in my opinion, based off the trend we're on, based off how much Tesla wants to move, and based off how oversold the market is, because relief, it's kind of overdue right now. So I apologize if this video is too complicated. It may have been a little bit difficult to understand as I tried to make it a little simple, but just know that when share prices or stocks start to go up, having a lot of calls in the money could be good. It's just a good indicator for good price action for the next day that could push prices up. It's just one indicator. It's not 100% guaranteed, but it's very likely that this will cause some gamma that pushes the share price of Tesla up due to market makers that start to delta hedge by buying back securities or buying more Tesla shares to essentially assess the risk that goes up. Now, it's a good sign. I do think we're going to push up. That's very good. Does this guarantee it's going to last forever? No. I do think we're going to get rejected at some point. The quote unquote bear market isn't necessarily over. It's just on stall right now. So I want to put it out there. I'm still very bullish, right? Long term, this thing is going to squeeze to the moon again one day. It's going to hit thousands of dollars a share. But for now, just know that for the next few weeks, I'm very bullish. When this thing runs, it likes to run, and things are looking good. Anyways, thank you for listening. Have a great rest of the day. Tesla to the moon. Enjoy your weekend, and peace out.